Warren Buffett is one of the world's greatest investors, and every year he writes a letter to his Berkshire Hathaway shareholders. This provides an overview of how well Berkshire's performing, but it also gives an insight into how he and his partner Charlie Munger see the world of investment right now. So in this video, I talk about some of the reasons behind Warren's incredible performance, but also talk about some surprises from this year's letter. Now, if you do enjoy our content, please do subscribe to our channel. That way you won't miss any new videos. So let's look at the 22 letter to shareholders in a bit more detail. So what is Berkshire Hathaway? Well, it's quite a complicated corporate structure, but it consists of two main chunks. One of them is a conglomerate of companies which are owned wholly by the parent company. These are companies which over the years have been bought by Warren Buffett and which are owned outright. And they come from a very wide range of industries. Usually they're chosen because they're very cash generative. They feed that cash into a pool which can then be redistributed amongst the different subsidiaries. Now, Warren Buffett chooses the CEOs of each of the subsidiaries and he lets them run with quite a lot of autonomy. So that's the first chunk. And then the second chunk, which most people think about, is the stock portfolio. These are not companies which are owned outright. They're just bought on the stock exchange, just as you and I would buy stocks. But of course, he buys them in much bigger sizes because he has such a large amount to invest. Now, usually these add value to the overall company because the share price goes up. And it consists of the stock picks which Charlie and Warren come up with. Here's the first chunk, which is the conglomerate of companies, the operating companies in Berkshire Hathaway. You can see the four primary industries are insurance, railroad, utilities and energy, service and retailing, and manufacturing. And overall, these companies employ over 380,000 people. And then if we look at the stock portfolio, these are companies which are just bought on the stock exchange. Here are the holdings right now. You can see the size of the holdings are pretty spectacular, and in many cases the stake in the company, which you can see in this column, is usually very sizable. So for example, Berkshire owns almost a third of Kraft Heinz and about a fifth of Occidental Petroleum. Now let's take a look at Berkshire's stock performance. Now, for any stock picker, what you care about is how much they outperform the broad market. So what I've shown here year by year is the outperformance of Berkshire Hathaway stock relative to the S&P 500. Notice how over time, the huge years of outperformance have gradually tailed away. In the early 70s, they were sometimes 100% outperformance, but more recently, it's been less than 20%. 2022 was unusual in that it had a huge outperformance. It was 22%. Why do we see this tailing away of the outperformance? Well, to first order, Berkshire Hathaway is the S&P 500. It's grown so large that it's become very difficult for it to outperform relative to that index. It actually owns a sizable proportion of the S&P 500 itself. And if we look at the latest 5 years of performance, you can see that it's roughly neck and neck with the S&P 500. So Berkshire share performance is shown here as triangles. The S&P 500 returns are the circles, and a kind of comparable index would be the S&P 500 Property and Casualty Insurance Index. Those are the black squares, and those have actually outperformed Warren Buffett's fund over this period. So there was a long period when it seemed as if Warren Buffett had lost his mojo, but now it seems with 2022 that he's back on form. One of the things that Warren Buffett always stresses is that him and Charlie are business pickers, not stock pickers. What does that mean? Surely they're the same thing. Well, the point he's making is that he's not a trader. He's not buying stocks simply because he thinks they'll go up. He's buying businesses because he thinks people want their services and the goods that they produce, and that they're going to provide those goods and services in a very profitable way. So it's about the economics of the business over the long term, not about getting into and out of a stock very quickly. However, what's really shocking about Warren Buffett is his modesty. He says that over the years, I've made many mistakes. And he breaks down his investments. He says his hit rate's pretty low. He makes a good choice once every 5 years or so. And if he looks at all of the company he owns, only a few of them have truly extraordinary economics. Many of them have very good economics, but he admits that a large group of them have marginal economics. Now, because he's a value investor, he comes up with a fundamental price which he thinks the company's worth, and if markets were truly efficient, then he shouldn't be able to beat the market. However, his huge history of beating the market shows that markets aren't efficient. He says that efficient markets exist only in textbooks, and he also says that marketable stocks and bonds are baffling. You can only work out their behavior in retrospect. In other words, he thinks that there's a lesson in this for investors, which is that the weeds wither away in significance as the flowers bloom, which is a very poetic way of saying that it just takes a few winners to work wonders. And he has a nice addendum, which is that it helps to start early, but also to live into your 90s. Now let's turn to the results for 2022. Was it a good year? Well, Warren certainly thinks so. He says that Berkshire had a good year in 2022. But then he says something interesting, which is that the company's operating earnings, exclusive of capital gains or losses from equity holdings, set a record of $30 billion. So here are those operating earnings. You can see that they're pretty good. 7 billion, 9 billion, 8 billion, 7 billion. But I wonder what would happen to those earnings if we did add back the gains and losses for his equity portfolio. Oh, not so good. And if you look at Q2, you can see there's a 44 billion loss. If we go back to the structure of the company, what he's saying effectively is you should just ignore the stock portfolio part and just look at the conglomerate of companies, because that's the important part. And he goes on to say that the earnings, the GAAP earnings, that's the generally accepted accounting principles earnings, which is a standard way of reporting earnings, are 100% misleading when viewed quarterly or even annually. The quarter-by-quarter gyrations, regularly and mindlessly headlined by media, totally misinform investors. But I think this is a bit disingenuous because he admits that over the past decades, those capital gains have been hugely important to Berkshire. So I think he should own up when he makes a loss and say, yeah, we did badly this year. So if we do look at that core business, the kind of cash generating juggernaut, which is the heart of Berkshire Hathaway, these revenues are steadily increasing over time. So in 2020, it was 246 billion, then 276 in 21, then 302 billion in 2022. However, when we subtract costs, you can see that the kind of crown jewels of the conglomerate, which is Geico, the insurance company, has actually generated a very sizable loss in 2022. And you can also see that mark-to-market loss for the stock portfolio of $68 billion. If you want to learn more about investing and get up to Warren Buffett's level, then you could sign up for our weekly market roundup. No guarantees, of course, but you will learn about what's going on in markets without any of the noise. If you do want to learn more about that, just click on the link beside me and in the description beneath me. So although Warren doesn't want us to, let's look at some of those stock portfolio losses. Now, he's right that they're very volatile from year to year and quarter to quarter, but that's partly because they're so concentrated. In fact, 5 companies make up 3/4 of the fair value of his portfolio. That's American Express, Apple, Bank of America, and Coca-Cola. And as of this year, Chevron Corporation. Notice there's also concentration within the US. So if we look at the performance of those 5 stocks since 2020, you can see it's been a pretty good run between 2020, despite the initial sell-off, and 2022. Coke and Apple in particular did very well. However, over the course of 2022, you can see that there was a fairly substantial sell-off for all of them, with one exception, which is Chevron. And there he built up his stake in the first quarter of the year. But for the other stocks, particularly Apple, where he has a huge holding, and also Bank of America, the fall was almost 30%. However, overall, you can see that Berkshire Hathaway clawed a positive return over the course of the year, and that was substantially higher than the S&P 500, which fell by 20%. So this is the outperformance that he's reported for this year. I think a lot of that outperformance comes from the core, the conglomerate, and not from the fact that he's been very good at choosing stocks which have weathered this storm particularly well. Now let's look at what he's bought and sold. For starters, he bought back some of his own stock. This concentrates the holding for existing shareholders, so it's a way of giving back some value to his shareholders. But he's pointed out in the past that that only works if the company's reasonably valued. It's something he calls accretive value. Now, if he saw huge value elsewhere, he wouldn't be spending $8 billion to buy back 1% of his own shares. He'd be going out and buying lots of other companies. So this also tells you that he doesn't see a lot of value in US stocks at the moment, or stocks elsewhere for that matter. But he was at pains to explain that he thinks that share buybacks aren't always a bad thing, and that if people tell you that all repurchases are harmful to shareholders or to the country or simply benefit CEOs, you're listening to someone who's an economic illiterate or a silver-tongued demagogue, or both. But that's not to say he didn't do anything. He did make some sales. So for example, he sold some Taiwan semiconductor manufacturing company. He cut his stake by almost 90%, in fact. That may be for geopolitical reasons, but also because of the CHIPS Act, which is trying to get more chips manufactured on US soil. He's also cut his exposure to a couple of financials. So US Bancorp, which is a regional US bank, he cut his stake by 2/3. And Bank of New York Mellon, he halved his stake. These are cyclical companies, so maybe he's trying to dodge that bullet if the US does enter a kind of softish economic period. And he also made some purchases. He bought some energy stocks. He bought a fifth of Occidental Petroleum and about 10% of Chevron. And he also completed a takeover of Allegheny, which is kind of like a mini Berkshire Hathaway, with insurance companies, but also a very diverse conglomerate of other industries. An ongoing theme with Warren Buffett, which he always returns to, is the American Tailwind. And he mentions it when he's talking about the 58 years of Berkshire Hathaway history, which he describes as a bumpy road involving a combination of continuous savings by Berkshire's owners, in other words, retained earnings, which grow the company, and over that huge period of time, the power of compounding, and on his part, as part of the management of the company, avoidance of major mistakes. But he says most important of all is the American tailwind. So he says America would have done fine without Berkshire, but the reverse is not true. His point here is that the infrastructure provided by America in terms of growing incredibly successful companies and growing globally has helped Berkshire hugely in building wealth over a long period of time. And then he says something which is very surprising and quite unusual. He talks about giving back through taxes. So, for example, he talks about how much Berkshire has paid in taxes between 2012 and 2021. It's a staggering $32 billion. In fact, it's about 1,000th of the total tax revenue which the US government gets. So if there are 1,000 Berkshire Hathaways, nobody else would have had to pay taxes. And he has a nice visual analogy, which is to say if you stacked $100 bills to make up $32 billion, it would be a 21-mile high stack, which is about 3 times the height of an average commercial airliner. And far from whining about paying too much in taxes, he says that we hope and expect to pay much more in taxes during the next decade. We owe the country no less. America's dynamism has made a huge contribution to whatever success Berkshire has achieved, a contribution Berkshire will always need. So essentially he's saying he wants to pay the US back. We count on the American tailwind, and though it has been becalmed from time to time in recessions, its propelling force has always returned. Unfortunately for the 2022 results, it seems as if the US is becalmed right now. So the American tailwind has turned into a headwind. So for example, one of the operating companies which is owned by Berkshire Hathaway is called Clayton. So they manufacture mobile homes, but also prefabricated homes. And at the end of 2022, their backlog was $256 million, but that was down 82% from the prior year end. The demand for their product has fallen, and that's because of interest rates primarily. The annual report says that Clayton's building products business has benefited in recent years from the low interest rate environment, but because in 2022 rates went up, that contributed to slowing demand for new home construction. And we see the same reduction in demand for their goods and services if we look at their apparel sector. So one of the apparel brands owned by Berkshire Hathaway is Fruit of the Loom. And in 2022, that suffered low sales volumes such that the company decided to downsize their workforce or right-size their operations, as they put it, for the long term. And as we saw, even the jewel in the crown of the operating companies, which is the insurance company Geico, has also suffered. And that's because the pre-tax underwriting results were significantly affected by increases in average claim severities. So this isn't the number of claims, it's the size of each claim. In other words, it's paying out more on its policies than it's getting in as premiums. However, over the course of this year, it's expecting that revenue to recover. And that's because in several states, it's getting approval to increase its premiums. Let's end on a positive note, which is the bromance between Buffett and Munger. Or as he puts it, nothing beats having a great partner. So let's rattle through 5 highlights of Charlie Munger's wisdom. And these are just quotes from a podcast which were quoted by Buffett. The world is full of foolish gamblers, and they will not do as well as the patient investor. Buffett and Munger are, of course, very patient. Early on, write your desired obituary and then behave accordingly. And then there's one about good long-term investments. Warren and I don't focus on the froth of the market. We seek out good long-term investments and stubbornly hold them for a long time. And then a warning against leverage. There's no such thing as a 100% sure thing when investing, thus the use of leverage is dangerous. If you are highly levered and you suffer a huge drawdown to zero, say, a string of wonderful numbers times zero will always equal zero after that point. And then finally, one about continuous learning. You have to keep learning. If you want to become a great investor, when the world changes, you must change. And the last quote is actually from Warren Buffett talking about Charlie Munger and how he usually ends arguments. Warren, think more about it. You're smart and I'm right. So that's my take on the 2022 letter. A little bit disappointing in terms of results, but still it contains that Buffett wisdom, which is invaluable. And if you look at their website, there are free copies of those letters going all the way back to 1975. Now, don't forget our newsletter, which is also free, our weekly market roundup. If you want to learn more about that, you can just click on the link beside me and look in the description beneath me. And as always, thank you for listening.